Hi there folks, welcome to this week's weekly report. It's Monday the 22nd of March. Boy, the year is flying by. It is now officially spring here in the UK. It doesn't actually feel like it, but there you go. Right, okay, so last week we had a really busy week in terms of the central bank rate decisions. First of all, you had the Fed, FOMC, that's where Powell basically mapped out his projections and the committees for the months ahead. Basically a little bit more dovish than the market was expecting, although the yield curve didn't reflect that. The yield curve, the 10-year yield curve was surging on as well. We had the yields hitting up there at 1.7 at one point, coming back a little bit at the moment. And why is this important? Well, this is important because if the yields are increasing in a particular economy, it basically has a drag or a pull effect on the currency. At the moment, you can get 1.6 for a 10-year deposit. That's becoming reasonably attractive. But of course, if you want to benefit from this higher rate of interest, then clearly you need to buy those bonds. And to buy those bonds, you clearly need to buy the US dollar first. So this is basically having a pull up effect on the US dollar. And that's why the dollar is reasonably strong at the moment. We also had rate decisions out of the Bank of England, pretty much in line with what's expected there, basically saying that they're not going to start moving interest rates until we're seeing a positive push on inflation up there above 2% and so forth. And we're not seeing much there at the moment at all in that regard. And then you had the Bank of Japan. They basically put a bit of a bid on under the Japanese currency as well, as they were basically saying they're allowed to let their currency fluctuate now in 1/4% band as opposed to just 0.2%. And the market seemed to like that, so the Bank of Japan basically helped push the yen higher. The yen actually ended the week as one of the strongest currencies. In fact, if you look here at the momentum meter, it shows you exactly what is strong and what is weak. I rely on this for all my Forex trading. It basically tells me where the money is flowing. All the different colors represent the different currencies. Anything above the line is deemed to be a strong currency. Anything below the line is deemed to be a weak currency. But what I like to look at is the trajectory of the lines, where the currency has been and where it is heading. Basically, is it moving up or is it moving down? You see here these low yielding currencies, the yen and the Swiss, basically they have been edging up towards the end of last week as well, and are now becoming a stronger currency. This is on the daily. If you actually drill this down to the lower time frames, you'll see that the yen is in fact one of the stronger currencies there at the moment. You see the CAD's been extremely strong for the last couple of weeks, buoyed of course by oil prices. Oil prices had a real shake last week, dropped down 8% I think it was on Wednesday, and consequently the CAD has come back down as well. Of course, Canada being a big exporter of oil, and it's very susceptible to oil price movements as well. So CAD is coming down a little bit, but interestingly enough, the euro has been weak. It's been weak for quite a long period of time now, and it continues to trade on the back foot as the vaccine rollout there seems to be stalling, certainly ahead of the counterparts in the UK and the US and so forth. So the euro is under a little bit of pressure at the moment. It is one of the weaker currencies, and you can see the dollar there, the greenback. That's why I coloured it green, basically showing a bit of strength, ending the week reasonably high. This is as the daily. And then you've got the commodity currencies in there as well. The Australian, New Zealand, pretty much moving flat. So as trend followers, I always like to buy the strong currencies and sell the weak currencies. That's why this is so important. Okay, so let's have a look at what we are looking at this week. Trade in the spotlight. Okay, so the boys, we're looking here at selling the euro against the US dollar. The US dollar, as I say, is still strong. Those bond yields are pushing up the US dollar, and the euro is under pressure as we see the vaccine rollout basically stalling. We're coming back up now. We've had a bit of a pullback in the early start of the week, but we're coming into what used to be a level of support is now likely to act as resistance, and we see that trend continuing on to the downside. Also, we're looking at an Aussie Swiss, the Aussie against the Swiss franc. So we're looking at a continuation of that trend down as well. It's been trading to the downside. The Swiss has been a strong currency towards the end of last week, pushing up again. You know, the Swiss National Bank, they're meeting again this week, the SNB. They'll be giving their views on the economy going forward. You know, the Swiss, the SNB, they always like to talk down their currency. They always like to talk about how much they can intervene and how much they can sell, and also how they can move their rates even lower than where they are at the moment, minus 0.75 I think it is at the moment. So we're not expecting any deviation from that stance. We're still expecting the SMB to talk down their currency, but the more they talk it down, it seems to be the higher it goes. So we're looking at selling the Aussie dollar against the Swiss. Just talking off camera before we came on, all the problems that's going on in Australia at the moment with the mite and the ants and the floodings and so forth. So lots going on over there, not necessarily the reason why we're selling the Australian dollar, but it is actually in a nice downtrend. So we're seeing that one likely to continue. So trade top picks for the week. Well, I'm looking at the euro against the British pound, pretty much really strong down currency, down cross at the moment. It's trading to the downside. Every pullback we seem to get in this currency pair seems to be met with a wave of selling. So the trend is truly down at the moment. Of course, with the vaccine rollout stalling in Europe and actually doing quite well in the UK, that's likely to have a continuation to lower with this currency pair. So we're quite liking that at the moment. We're at a level of support. If it breaks and closes through that level, then I wouldn't be surprised to see this currency pair move all the way back down to the 83.00 level, possibly even lower in the weeks and months ahead. So that's the euro pound. Max is looking at a euro against the Oz. This is coming up to a really important level as well. If you look on the weekly chart, euro Oz is basically coming into this support zone. A break lower of this support zone could really open the trapdoor into lower levels. So we're looking at that down. Max has gone down to 153.40, but if we break down to there, we could easily see even that push on even lower. And looking at Paul's top pick for the week, Paul is looking at the CAC 40. The CAC 40 is basically the French stock market, top 40 companies in France. Stock markets around the globe are under a little bit of pressure. We seem to have come into sort of some resistance up there, and the S&P 500 and the Dow. So global stock markets are under a bit of pressure. Worst one, or the biggest effect, is likely to affect maybe the French market as well, of course, as that vaccine and the lockdowns now seem to be excelling in the European continent. So selling the CAC lower. All right, let's have a quick look at the economic calendar to see what we've got to look forward to this week. Okay, so this is the economic calendar. Very important that you have something like this in your artillery. You need to know what's going on in the markets. You need to know, so A, you don't get caught out, and B, there may be some money-making opportunities. And this basically tells us exactly what's going on in the days ahead. Now, the way to read this normally is if you go to the far right there, you'll see impacts. Anything with a red band tells you that it's a high impact news event likely to have an impact on the markets. It's really important that you pay attention to information like here. Here we've got PMI data in the Eurozone. Very, very important. PMI data basically stands for Purchasing Managers Index. It's a forward-looking indicator. It's basically like a survey for all the business leaders and so forth out there, asking them, are they investing in plant, machinery, staff and what have you. So it's a forward-looking indicator. Central banks love to see PMI, so always paying attention to what is going on in the PMI. This week, you'll notice, if you look at this calendar, quite a lot of Fed speakers. A lot of the Fed Council will be talking basically about their outlook going forward. Remember, we did have FOMC last week, so it's not maybe so important, but we always pay attention when the Fed presidents come out, start speaking. So be attentive to that. Okay, so later on in the week, we've got some UK employment data, very important employment data. Of course, that's like the start of the curve. We're always looking at what's happening to inflation and the economy. Well, the first thing we look at is the jobs. Are people getting employed? If people are getting jobs and employment, then that basically means they've got money in their pocket. If they've got money in their pocket, what are they doing? Well, they're likely to be spending their money, and that's likely to have an up pressure on prices, which is what the central bank has to defend. So we're always looking to get ahead of the curve by looking at the job numbers. So that's very, very important. We've got some housing data out in the US later as well. Then not much out for a couple of days. We've got some more UK data out on the 24th. That's basically on Wednesday. It's producer prices. That's very important as well. It tells us how much the producers that are making our goods and services, how much they're paying for their raw materials and so forth. And of course, if it's increasing, that basically means they've got to push that price on into the customer as well. So always looking at producer prices as well. Then we actually have the consumer price index as well. That is inflation. It basically tells us what is happening to prices. And remember, the central banker is always looking at what is happening to prices. They're mandated to control inflation, as you know, around the 2%. US, we've got durable goods later on in the week. Durable goods is basically white goods like washing machines and tumble dryers. Why is this important? Well, because if people are spending money on these goods that they don't buy every day, that basically means they are optimistic about their jobs and optimistic about the future. So it's a good indicator to tell you of the sort of economic sentiment of the average guy in the street. And then we got the US PMI data out as well. Remember, PMI data, forward-looking indicator. Lagarde is speaking as well later on in the week. Lagarde is the European president. It'll be really interesting to see what she has to say this week in light of the vaccine rollout and in light of the other central bankers all getting very vocal on their interest rates as well. Be interesting to see what her view is of the European economy going forward. Do they need to help and boost the economy with more stimulus? That could be very relevant to what's happening in the euro. So we could definitely be paying attention to that. She's speaking again later on in the week. So that's basically we've got the US jobs numbers out again on Thursday. That comes out every week. Gives us a clue of what's happening to the US job markets. Very, very important. Not maybe as important as the non-farm payroll, but we still like to see what's happening on a weekly basis to the jobs market. So we'll be watching that later on in the week. As I say, lots of Fed speakers there as well. So you've got some European speakers later on in the week as well. So not a really busy week. Oh, we got retail sales out in the UK as well. We need to pay attention to the retail sales. That is on the 26th. That's going to be on Friday, of course, because that's really important. Retail sales tells us what's happening on the high street. Are people spending money? And you know what? If people are spending money, you know what's happening to prices, and you know what's happening to the central bank when he sees prices going up as well. So pay attention to that. Normally what happens is here you've got an estimate. All the analysts, they put the numbers together, come up with an estimate. And then when the release happens, we decide whether it's better or worse than expected. And the markets tend to react on that. That's why you need to have one of these economic calendars to hand. Okay, so I hope you found that useful. Now, we are streaming live 7 times a day around the clock. So if you want to come over and take part and discuss these opportunities with us, you can do so. You can take the 7-day free trial to see what it's all about. If you don't want to stay, then you don't have to, of course, but I'm sure you will love it. If you don't want to come over, not a problem. I will see you next week, same time, same place. Have a good week.